The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Keith in Philadelphia. Hey, Keith, what's going on?
Hey, Tom. How you doing?
I'm doing great, man. You having a good day out there?
Yes, sir. Yes, sir. So, a couple things, Tom. Number one, I started listening to you in 2001 and never stopped. Yep, and I owe you a lot, my family as well. Okay, this is the first time I'm calling.
I appreciate that, man. Thank you so much.
And now, here's Tom O'Brien.
Well, welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 2 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our 4 agreements. Take action on your ideas. Doing your best means to take action. You can have many great ideas in your head, but without action upon an idea, there'll be no manifestation, no results, and no reward. Market-wise, let's take a look at it out here. We had the Dow up 162, NASDAQ up 12, S&P's up 12, gold contract up $21, trading at $1,721 an ounce. Silver up 42 cents at $33.48 an ounce. Platinum up 29 bucks at $1,596 an ounce. Copper up 10 pennies at $3.51 a pound. Light sweet crude down $2.42 a barrel at $90.73. Bonds down 1.5 at 138.24. Dollar index up 8 ticks at 76.40. Euro 139.11, and the yen up 16 at 76.25. Our phone number is 877-927-6648. Give us a call, folks. Well, I know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We are at 1242 on the S&P. Goes up 12 bucks. So that does put it on the other side of the range, meaning over the highs that were generated on the 31st. Yesterday, you come back inside. You open inside them today, closed outside them, and that puts saying that, yes, the 1256.58 high of Monday can get tested, which is 1 billion shares versus 1 billion shares. You go over to the Dow Industrials. We take a look at the Dow. What you have with the Dow, Dow did the same type of setup, got down to 11,694, closed at 11,869. That says that high of Monday also is going to go. It's going to go after it's 11,940. Composite, NASDAQ composite, and the composite, folks, is a trip in itself. Now, this is what you have with the NASDAQ composite. Your composite's at 2650. The 2650 is still inside the bottom of the range. 2667 is the high of it. NASDAQ composite gets down to 2595, 2.1 billion versus 1.8. So you get down there, volume came up slightly, rejected lower price. However, the way that it rejected lower price, you had an expansion in volume. That's saying it's going to be right back down there to that 2598. If we go over to the NDX 100, what you're going to see is this. NDX 100 comes down to a price point today of 56.21, has the expansion of volume, 97 million shares. That's after making a high out there with 61 million. That's saying you're going to be right back down at those lower levels. The NDX 100 is at 57.27, which is still actually not inside the, it's inside the lower range, but inside the range of the 20th of September, which actually is a lower range than the actual breakout when we went topside on the October 14th level. Now, what is it all about? It's all about the dollar, folks. If you're ever in front of a machine out here today, just absolutely amazing. But as we're doing this, I know Dave's got a question about the dollar, so we'll do it simultaneously. We got Dave from Clearwater. Hey, Dave, what's going on?
Tom, let there be any dispel any doubt between the connection between this market and the value of the dollar index.
Is that wild or what, man?
It is absolutely wild. And talk to me, Tom. What am I missing in this chart? It seems like for the last couple days, or really 72 hours or so, it keeps testing that 618 retracement at the 7620 range, shoots up, wide price spread, accelerated volume till about noon, and then just floats back down during the day. It looks like we got to a higher high, though, on the the last 72-hour consolidation. What am I missing? Is this thing just going to build some massive costs for when it breaks? It's going to break large, or am I missing something?
Okay, so what we're talking about is this, folks. If you're watching Tiger TV, Dave is trading during the daytime. We're trading during the daytime. And it is amazing. I mean, the dollar, folks, is running everything. Now, in this particular case, though, we're talking about the last 3 days running it tick for tick. And I'm not kidding. I'm talking about by 30-second increments, folks, okay? If the dollar basically goes up, S&Ps are getting smoked. Dollar goes down, S&Ps will go up. I mean, it's so quick, it's insane. So, what did we have? Okay, so when you look at the dollar, we had a break topside with conviction at 0920 yesterday morning. Goes up beautiful. That's what Dave's talking about. You get 300, 400, 23,000 contracts actually hit. You back down with nothing. You come back down with 380 contracts. Nice. Build some cars this morning. Bingo. Get the contracts right there again. Breaks over the highs. Does it with volume. Backs down with lighter volume. That's saying that the next move here is 77.45, Dave. You know,
but we got a higher high, though, Tom. That was the thing today on the consult. You know what I'm saying?
Yeah,
on the last 72-hour consolidation.
They're ABC ups. They're small ABC ups. That's what they are. And I'll tell you what I'm expecting, though. I'm absolutely expecting that this is going to go on fits. And the fits that I'm talking about, folks, is this. This will go on fits for about, I bet it's going to be 7, 8, 9, 10, 11 months, but you're going to keep going higher and higher and higher. The reason, you know what the reason I'm saying this, Dave? This is exactly how gold acted at $282 to about $325. It was absolutely just insane. And that's when the dollar was at 121. In fact, here I'm going to bring the dollar back now. If you're watching Tiger TV, folks, I'm going to bring the dollar back at 121. See, the beginning of really, really large moves, okay? There's a battle. I mean, that battle is a monster battle out here. Okay, so look at this thing, man. Okay, so when I have this up, folks, what you're looking at now is that we're back at 2,000. That's when gold was at 282. The dollar first traded at 118, gets back down to 109, comes back up to 120, gets back down to 113, gets back up to 120 again. That, I just took you from October of 2000 over to January of 2000, and so a year. I took you. That was 13 months, okay? And then bye-bye. See ya. Don't want to be a 120 all the way down. Now we have already. Now I'm going to take you on the other side. Now watch what we've done on the other side, folks. The low in the dollar was 08, March of 08. What does it do? It goes from 70 up to 87, back to 74, up to 84, back to 73. That's what we just come off, okay? This thing wants to go, man, and it wants to go on a long-term basis, so.
Awesome. You got time for another question, Tom?
Sure.
This is a general trading question, not a specific trade per se. For example, a lot of times I've called into your show, and thank you for taking my calls, by the way.
Oh.
And I've been riding in particular, the NQs up and down on 10-minute charts. But every time I would call and say, hey, Tom, I'm thinking about doing this because it's a bull Gartley or a bear Gartley, I noticed time after time after time you would say to me, Dave, look at the daily, look at the larger move. So this particular go-around, I took your advice to heart, and I shorted the NQs at 23.80 and change, I don't know, 2 days ago, whenever it was.
Yeah.
Monday. It's all a blur, Tom, because I barely slept in 3 days. But anyways, I shorted at 23.80, and instead of doing what I normally would have done, in other words, ride this thing on a 10-minute chart, I let it go. And I'm just saying to myself, okay, Dave, don't micromanage this thing, because I was trying to grab the cash on the C that he moves up within the larger move down. So my question is as follows. In your trading experience, when you're looking at a daily chart and you decide to long or short within the context of the futures exchange, have you made more bread riding the 10-minute and then trying to pick up that B2C of the retracements, or you just put the trade on, put your stop in place, and let it ride?
This is a great question, folks. And when you hear the answer, it's going to blow your mind. Okay, so, folks, when you're trading every day, and so his question specifically, you heard him, he's been up for 3 days. What happens with the day trader is this. you can come into work some days and you'll say, okay, you know, I'm going to bang out 30, 40, 50 trades, right? And you don't basically say that, but that's what ends up happening, right? Other days you'll come in and say, no, you know, just turn around, I'm going to do a couple swing trades, okay? So right to this point, I still don't know what I'm going to do, okay? I know I'm going to look at it, okay? What does happen is this. What you can't do is if you are going to do, let's say you came in and said, no, I want to just do a large swing trade, right? That's what you have to do, and then put your stops in accordingly, okay? You know, like that 2380, well, you know, you got the full A to B equals C to D. You know what I'm saying?
Right.
Now, what you have down at the bottom, which I can see, is that, you know, you have volume, so maybe you didn't close and say, oh, man, I just gave that back. I can see that in a second, okay? And the same thing would have happened to me. Now, this is the thing that I want you to take away with this. The largest day I ever had, and there was just another one not too long ago, meaning that the same type of day, was that the market was actually flat, right? And you were going long and you were going short, and it's this type of volatility that you can turn around and take the monster moves out of the marketplace. And so because the spreads are so wide, Dave, what ends up happening is that as you're firing them off, meaning let's say you're going short, it comes back down to the lower side, it has lighter volume, you're closing it, you're going long, you're putting your stop on the other side, it goes back up the other side, you sell it out again. And now, what we're talking here, I'm not suggesting this, folks, but I know what he does. So every time you're doing that, though, as you're buying, you already put the sells in. It comes up, it hits you, great. Bang, you hit it again. You come back down the other side. The largest day I ever had, I actually, the market was flat, and this was in 08, right? I remember I walked upstairs to Angie, and I says, honey, I'm going home. I'm going out in the boat. And it was insane. So the key is you need wide price spreads. That's the bottom line. Do you know what I'm saying?
So if you don't have a wide price spread where you've got a big enough trading range where you can actually execute those trades properly, it's better just to leave it go at the day level and let it fire off versus kind of like what we're seeing now, where we're seeing substantial moves intraday with, you know, clear-cut buy and sell signals.
Well,
so in that environment, you've been trading in 10 minutes?
In this environment here, I'd be trading the 10 minutes with the bias to the sell.
Okay.
That's the move. Because you have the wide price moves, but every time it's hitting the tops, it's selling off dramatically. You know, it comes back up the other side, you hit it again. Where you're going to get, where I always keep getting nervous is on the buys on these. Do you know what I mean? Because what happens is this: if you're going to do that, make sure you put your stop underneath it, because this downdraft is going to come out of nowhere.
Well, that was the thing, so that's why I let it ride, but then I watched it retrace back up, and I'm like, man, look at all the bread I'm giving back to the market. I got to get Tom's advice on this.
No, I'm with you. I know.
Thanks, Tom.
Okay, brother. Have a great one, man. Have a safe one. We're coming back, folks. We're going to talk about MF Global. MF Global, folks, is in big, big trouble. We're going to be right back.